Welcome everyone to Chapter 3, and let me tell you, this is where things get real. If you've ever wondered what separates a good accountant from a great one, the answer lies in the topics we're about to cover. This chapter is the core of accounting, the foundation upon which everything else is built. It's not just important, it's absolutely essential. For every single one of you starting your accounting journey, these topics are your golden ticket. Why? Because mastering the skills in this chapter is what makes you indispensable. If you get these concepts right, you'll set yourself up for an incredible professional career. You'll be the one businesses rely on to make sense of their financial world. But let me be completely honest, if you overlook these basics or don't fully grasp them, it can create long-term challenges. Accounting is all about precision, and these are the tools you need to get it right every single time. Think of this chapter as the toolbox for your future. Each topic is like a tool you'll use every day to help businesses stay on track, thrive, and grow. From recording transactions to managing ledgers, you're not just learning processes. You're learning how to transform raw financial data into meaningful insights that drive decisions. You're becoming the expert every business needs. Now, I know this might sound intimidating, but here's the good news. You're not alone. I'll be walking you through each topic step by step, making sure everything is crystal clear. You've got what it takes to succeed, and together, we're going to make sure you come out of this chapter feeling confident and ready to apply what you've learned. So, let's take a quick look at what's ahead. 1. Recording business transactions, an overview. The starting point for understanding how financial records are built. 2. The general ledger, the heart of accounting where everything comes together. 3. Recording in the general ledgers, learning how to post entries correctly and maintain accuracy. 4. Trade receivables and trade payables, managing the money businesses owe and are owed. 5. Accounting for sales tax, a vital skill for compliance and financial reporting. 6. Methods of coding data, organizing information efficiently to avoid confusion. 7. Manual and computerized systems, understanding both traditional and modern accounting processes. 8. Batch processing and control totals, ensuring your records are complete and error-free. 9. Accounting systems, how everything ties together in a functioning system. 10. Accounting modules, diving into the specific parts of modern accounting software. Every one of these topics is like a puzzle piece, and when you put them all together, you'll have a full picture of how to manage and understand financial data. And the best part? Once you've mastered these, you'll have a skill set that's respected, in demand, and highly valued in the professional world. So, are you ready to take this next big step? Let's get started on this incredible journey and unlock the skills that will shape your future success. All right, dear students, let's dive into our very first topic from Chapter 3, recording business transactions. This is the foundation, the very first practical step in preparing financial reports. It's where everything begins, capturing the financial story of a business step by step. But before we move forward and explore how to record transactions, there's something very important we need to understand first. What is a source document? Why? Because every single transaction in accounting is recorded from a source document. Think of it as the starting point, the evidence, or the proof of what actually happened in a business. Whether it's a sale, a purchase, or even paying a utility bill, there's always a document behind it. And this document guides how we record it. So let's take a moment to fully understand source documents before we move on to recording transactions. Trust me, once you get this right, the rest of the process will feel much smoother and more logical. Ready to begin? Let's go. What is a source document? Let's start with a simple question. How does a business keep track of its transactions? When money comes in or goes out, how do we know what happened? The answer lies in something called a source document. A source document is the original record of a business transaction. Think of it as the evidence that something took place. Whenever a business buys something, sells something, pays an expense, or collects money, a source document is created. It provides the details of the transaction: what happened, when it happened, how much money was involved, and who was involved. Source documents are essential in accounting because they provide proof that a transaction took place. They contain all the details needed to record the transaction accurately. They act as a reference if there are any questions or audits about the business's finances. Without source documents, we'd have no way to confirm the accuracy of the records in the accounts. They're the foundation of the accounting process. How to record a business transaction from a source document, step-by-step guide. When it comes to accounting, every transaction begins with a source document. The source document is the proof that a business transaction occurred, and it contains all the important details you need to record it correctly. Let me guide you through the detailed process of how a business transaction is recorded from a source document. Step 1. Identify the transaction. The first step is to figure out what the transaction is. You must ask, what happened? Did the business make a sale, buy something, or pay a bill? Is it a cash or credit transaction? Who is involved? A customer, a supplier, or an employee? What is the amount involved? Example: a business sells goods to a customer on credit. The customer is issued a sales invoice, which serves as the source document. This invoice shows the date of the sale, the goods sold, the quantity, the price, and the total amount owed. Step 2. Check the details on the source document. The source document contains critical details you'll need for accurate recording. Always verify. 1. Date of the transaction. 2. Parties involved, e.g. customer or supplier name. 3. Description of the transaction, e.g. type of goods sold or service provided. 4. Amount, ensure it's accurate. 5. Payment terms, if it's a credit transaction, when is payment due? 6. Taxes or discounts, if applicable. Step 3. Determine the type of account. Next, figure out which accounts are affected by the transaction. Ask yourself, does this involve an asset, liability, income, or expense? Is something increasing or decreasing? Example: in the case of the credit sale to John's Furniture, the business has sold goods, so sales, an income account, is increasing. The customer owes money, so trade receivables, an asset account, is increasing. Step 4. Decide the debit and credit entries. Accounting follows the double entry system, which means every transaction affects at least 2 accounts. 1. One account is debited, left side. 2. Another account is credited, right side. To decide, debit the account that increases in value or decreases if it's a liability. Credit the account that decreases in value or increases if it's income. Step 5. Record the transaction in the journal. The journal is the first place where transactions are recorded. Here's how it's done. 1. Enter the date of the transaction. 2. Write the debit account and the amount. 3. Write the credit account, slightly indented, and the amount. 4. Include a brief description of the transaction for clarity. Step 6. Post to the general ledger. After the journal entry is made, the amounts are transferred to the respective accounts in the general ledger. Each account will now reflect the updated balances. The general ledger is important because it organizes all transactions by account, making it easier to prepare financial statements later. Step 7. Cross-reference and attach the source document. To maintain accuracy and accountability, attach the source document, e.g. sales invoice, to the journal entry or record. This provides evidence of the transaction. Why is this important? If there's ever a question about the transaction, e.g. during an audit, you can refer back to the source document for verification. Step 8. Check for accuracy. Before moving forward, ensure the debits equal the credits. Verify the amounts match the source document. Double-check that the correct accounts were used. Pro tip: always review your work to catch errors early. Mistakes can lead to incorrect financial reports, which can harm decision-making. Comprehensive list of source documents for business transactions. Here is a detailed list of all the possible source documents a business might use to record its transactions. This includes documents for sales, purchases, payments, receipts, and other types of transactions. Sales-related source documents. 1. Sales invoice, issued when goods or services are sold on credit. It details the transaction, including the buyer's name, the amount due, and the payment terms. 2. Credit note, issued when a customer returns goods or there is a reduction in the amount owed, e.g., due to damaged goods or overcharges. 3. Delivery note, a document sent with goods to confirm what has been delivered to the customer. The customer may sign it to acknowledge receipt. 4. Quotation, provided to a customer to show the price of goods or services before a sale is finalized. 5. Sales order, issued to confirm the details of a sale agreed upon with a customer. Purchase-related source documents. 6. Purchase invoice, received when the business buys goods or services on credit. It provides details of what was purchased, the cost, and payment terms. 7. Debit note, sent to a supplier to request a reduction in the amount owed, e.g., for faulty goods or overcharges. 8. Goods received note, GRN, prepared when goods are received from a supplier. It records the quantity and condition of goods received. 9. Purchase order, sent to a supplier to confirm the order of goods or services. 10. Supplier statement, a summary of all transactions between the business and the supplier, including invoices issued, payments received, and outstanding balances. 11. Receipt, proof of payment received or made, either in cash or through other payment methods. 12. Check stub, the part of a check left in the checkbook after a check is written. It records details of the payment made by check, including the date, amount, and recipient. 13. Check received, a physical or electronic check received from a customer as payment. 14. Bank statement, a record of all transactions in the business's bank account, including deposits, withdrawals, and bank charges. 15. Petty cash voucher, a document used to record small cash expenses, like buying stamps, small office supplies, or coffee for a meeting. 16. Payment voucher, used to record payments made, often for larger transactions or where a check or bank transfer is involved. 17. Electronic fund transfer, EFT record, proof of payments made or received electronically. 18. Direct debit mandate, authorization for a supplier to take payments directly from the business's bank account. 19. Standing order confirmation, a fixed amount paid to a supplier on regular intervals, recorded for payment tracking. Cash-related source documents. 20. Cash receipt, issued when a customer pays in cash. It confirms the amount received. 21. Cash register roll or till slip, a detailed record of all sales made through a cash register. 22. Petty cash reimbursement form, used when the petty cash box needs to be topped up to maintain a fixed balance. Employee and payroll source documents. 23. Timesheets, used to record the hours worked by employees, especially those paid hourly. 24. Payslips, provided to employees to show details of their wages, including gross pay, deductions, and net pay. 25. Payroll summary, a document summarizing payroll payments made during a period. Miscellaneous source documents. 26. Utility bills, received for services like electricity, water, gas, or internet. They detail the amounts owed and due dates. 27. Rent invoice or agreement, records the monthly or periodic rent payment amount due. 28. Loan agreements, documents showing the terms of a loan received by the business. 29. Bank deposit slips, proof of cash or check deposits made into the business's bank account. 30. Insurance policy documents, provide proof of insurance coverage and any premiums paid. 31. Contracts or agreements, for services provided or received, documenting agreed terms and amounts. 32. Purchase requisitions, internal documents used to request the purchase of goods or services from suppliers. 33. Stock adjustment forms, used to record any corrections or adjustments to inventory levels, such as damaged stock. 34. Expense claims, submitted by employees to reimburse business-related expenses they've paid for personally. Why is this comprehensive list important? Each of these documents serves as proof of a business transaction and provides the details needed for accurate accounting. By knowing the types of source documents, you'll be better equipped to understand how transactions are recorded, keep proper records for financial reporting and tax purposes, avoid errors and ensure all transactions are backed by evidence. Think of these documents as the starting points of the accounting cycle. Without them, the rest of the accounting process, like recording transactions, posting to ledgers, and preparing financial statements, would not be possible. Thank you, dear students, for staying with us throughout this lesson. I truly appreciate your time, focus, and dedication. You're doing an amazing job by taking these steps toward mastering accounting, so give yourself a pat on the back. Now, this lesson covered the theory part of recording business transactions, and I hope it gave you a clear foundation. But here's the exciting part. In the next lesson, we'll jump into the practical side of things. We'll not only show you how to manually record transactions step by step using Microsoft Excel, but we'll also take it further by exploring 3 of the most popular accounting software programs: QuickBooks, Xero, and Sage accounting software. This means you're not just learning accounting concepts. You're also gaining real-world skills that will boost your career opportunities and set you apart in the field of accounting. Knowing how to work with these tools is something employers truly value, and you'll have a head start. So for now, goodbye and have a great time. Don't forget to support us by liking this video and subscribing to the channel so you don't miss the next lesson. I'll see you soon as we dive into this exciting practical journey. Take care and see you in the next lesson.